Joining us now is Sonders from Schwab Center for Financial Research. Lizanne, good to see you.
Good to see you too, Mike. Thanks for having me.
That certainly seems the game. I mean, today, as I was saying earlier, kind of impressive that the market kind of rotates away from some of the damage in Microsoft and elsewhere. If you were concerned about overconcentration in the market, I guess you've done some work on that front with some of the broadening so far this month. How are you seeing things?
Yeah, it's not only broadening into the obvious areas of equal weight relative to cap weight, small caps, international equities relative to domestic equities, but even within these relatively small cohorts in terms of number of stocks like the Magnificent Seven. I mean, today is a perfect example of that, where you have a 20 percentage point spread in the, up 10% by Meta, down 10% by Microsoft. So I think there's a sort of a more discerning palette on the part of both investors and traders, and you're seeing that show up on a day-to-day and a week-to-week basis, and I think, for the most part, that's a healthy backdrop for the market.
I was looking at some fairly interesting research on how broad you'd actually want to see the market. Ned Davis research said, 60+% of S&P 500 stocks were outperforming the index in the first part of this year. And if you look historically, if that were to continue for the full year, you could basically bet on the S&P being down. And essentially, it's kind of a very defensive posture. So I guess I wonder how you're expecting this year to track in general relative to where we are, in the economic cycle and all the rest.
Well, you could have a year where the S&P is down, like that NDR data shows, but that's also a backdrop that typically small caps outperform. So I think there's other opportunities within the market were that to happen. I think the most likely scenario for an index like the S&P is continued rotation within the index, where you have more dispersion across the board, lower correlations, even within cohorts like the Mag 7 or within the sort of typical leadership high momentum sectors like tech and communication services, which again today are on the complete opposite ends of the spectrum. Comp services on top, tech on bottom. And I think that rotation is likely to persist, but we could be in a 2021 kind of situation where you'd continue to see some pullbacks and some rationalization from a valuation perspective up the cap spectrum into the mega cap areas, but better performance under the surface of the cap weighted indexes. So you get a little bit of that valuation reprieve, but it doesn't happen like in 2000 where when that happens, the bottom falls out across the board. I think it's more of a rotational correction than anything more significant than that.